Hello everyone, my name is Andy. Today is Friday, August 11th. Time is around 6:40 GMT, and we will have a look at the Dow Jones futures on the Wanda platform. So here we are looking at the 4-hour chart. For this analysis, I will focus here on this structure. If you want to have a bit more context, please have a look at my higher time frame analysis. But so the idea is that we are working here on a wave 3, and that we are now probably, or not probably, I think it's quite sure, we are doing this wave 4 here. We reached the area of this wave 4, and so now we should see, are we ready for more upside, or will we further go down deeper into this area? So yeah, if we have a look at 1 hour. So overall, yesterday, yesterday we had this inflation data release. Like if we have this kind of economic events, this always creates, strong reactions to the upside, to the downside, but mostly these reactions are not very sustainable. And this is what also happened yesterday. And this offers also opportunities. So overall, my trading ideas yesterday were to put your orders at the extremes, and so this worked quite well for the FTSE, and here the Dow Jones. For the DAX and for the Nasdaq, we did not reach my extreme areas, but here it worked. It worked quite well, like you can see, like so we are moving corrective, and like if you're moving corrective, there are a lot of different Elliott wave counts. Like there are a lot of corrective structures. We can do zigzag, we can do double tree, we can do expanded flat, we can do running flat, we can do a triangle. So it does not really make sense to like overanalyze this, and be very accurate in your trades, in your in your entries. Like if you have days like yesterday, you just trade at extremes because you know that there will that an extreme reaction will come because of this economic event. And so like what we had yesterday, until yesterday, I told you that we could have finished the correction here, but of course you don't have to. You can always make another correction, which I always said. Like it could be we are finished here, we do a push up, and then we go again down in three, deeper into this area. Like you only know that the correction is finished if you take out this high here. And so this is exactly what happened yesterday. So like this here looked finished, or like this is one part of the correction, as I will explain in a minute. And then what we had yesterday was a push to the upside, and now we are ready again to go down. And so what is the like where do you put your orders if you have these kind of days like yesterday at the extremes? And so what do we know? Like no matter what this exactly is, so be it a zigzag, a double tree, an, a flat structure, like what do you know if this should be a wave B or a wave X, that we have to go into the area between the zero point 0.5 and the 0.854 FIB retracement. So if we want to do the double correction, we need to go into this area, and days like yesterday are perfect for this. You get this inflation rate data. I don't even know the number, but I assume it was favorable because we had this strong push to the upside. We create our wave B or we create our wave X, and then we go down again. So this is something that very often happens, and so most of the time we even go to like to levels that no one is expecting, because what are um, like beginning traders doing? They see this high here, they see this high here, and they think there is yeah, some resistance here, and they go somewhere short in this area against this high or this high. But then what does the smart money does? Like they know that the orders are here, and they just go there, take the liquidity which is here, and from there they go down again. Everybody is stopped out. The smart money has their money and the liquidity to go down again. And so yeah, what you actually have to do is trade at the extremes, which means like yeah, going beyond this levels reasoning, like the smart money, and then you put your orders, like if you have to put in this box somewhere your order, you put it above this here, these two highs, and this is exactly what happened. So now let's have a look. What can we expect from here? First of all, it could be that that correction is over. Like as long as we do not take out, as long as we this low holds, we can see more upside. Then this could be like I don't know, a one, a two, a three. Yeah, but it does not look really. Um, it could be, but I'm not really expecting this. What I would expect now is some more correction as like this here. So what? Let's go to the maybe to the 15 minutes. Like it does not really matter what this is here. Like it is corrective, but I see many things in this. Like this could also be a triangle here. What matters now is this low and this high. These are now your two extremes. So, and like I told you yesterday, it could be that we were finished here, and so what I will do is I assume that we are finished, but only one part of the correction. This part here of the correction, like so, I'm assuming a double tree now, and a double tree exists of yeah, three corrective structures. This should be corrective. This should be corrective, and then here we have another corrective structure. So until yesterday, I assumed that some corrective structure was finished here. We could also maybe have one more low, but it could have been finished here. So now I will just assume that it is finished here as a W. Then what we have here is actually also a nice corrective structure. Look at this. If we take here, this could be an ABC like this. So let's label this as an ABC. So from here, A, B, C, like this. Yeah, and what now matters? So do not really pay attention to this labeling. I think this might be right, but it could also be something else. The essence is this is corrective. This is our new important low, and this here is our new important high. So then this becomes the W, this becomes the X, and then our next area of interest to buy is we take the length of our wave W, the length of our wave X, and then I'm interested here in this area to buy again. This wave Y here. From here, I would like to buy again. But of course, like I said, it could be that the correction is over here. As long as we do not take out this low, the correction can be over. Then I have to delete this WXY and change this into something impulsive. So this should then be the start. This mess here should then be the start of something impulsive. But for now, I do not really think so. This looks also corrective. This is not really a nice impulsive structure. So I would assume more downside as WXY, but it could also be that the correction is finished here. So now, yeah, some trade IDs. Yeah, I think it could still be that we again take out this high here, that our wave X was not in yet. Then yeah, this can again be a short opportunity, but of course if we get here, yeah, it can also be that we are here to break this high. Like we are getting quite close. So the next time we get into this area, it could be that it is for a more upside. Take out this high and continue the impulse, or start with an impulse here. So it might be risky to try it one more time here to short, but it could work. And then yeah, to buy this area without any doubt. If we would reach here, this area, I would like to buy again. But yeah, of course, I want to see something. I want more data to better calculate my entry. But this here is the area that I consider to go long. Okay, that's my analysis for today. If you enjoyed it, please like, subscribe, comment to support my work, and I see you tomorrow for an analysis of the higher time frame. Have a nice day. Bye bye.